figured it out.
I'm recording this one so you can see it later. You can go over it and look at all the principles and write it down in your book.
Wonderful, wonderful.
Is this our second session?
No. Let me check my thing.
This is number 2 or 3.
12. I think this is our. Wait, let me look at my notes. This is our 1. This is our 3rd. Or I think this is our 3rd.
Session 3.
1.
Okay, session 3, retire into the
2.
stock market. That's what we're doing.
Yeah, this is the 3rd one. What's the title? Retire. What's the title for today?
Retire into the stock market. That's the whole.
Oh.
That's everything. That's the first 12. You put the date on top in your journal and put your initials.
Okay.
What's today's date? The 4th?
Yeah, the 4th.
Okay. So have you had a chance to review your journal? I want to cover a lot of principles, but I want to make sure that you're understanding, you're following along, you're learning. And if you have questions, let's answer all the questions first. That way we don't do things that you're not sure about.
Okay.
I want you to be comfortable with the lessons and understand everything. Otherwise, we have to review. That way we're clear that you know what we're talking about and what you're learning, and you can apply it in your account and be trading.
I haven't had a chance. I haven't had a chance to really go into the account and do any buy any shares or anything. I did upload my money, but I didn't to the account. But I didn't have a chance to go in there.
How much do you have in there? You don't mind me asking now.
I think it's like 2,000.
Okay. Did you get the margin account? Do you remember?
Yes, I did get
margin?
the margin account.
Great. That way, when you trade, you can trade fast right away. You don't have to wait 2 or 3 days for the trade to settle. You can buy something, sell something. You can also, if you have, let's say, 2,000, you can buy, let's say, 2,500 in stocks in case you wanted to buy a few more shares. Either let you do that on the margin, so it's no problem. It's nice, easy, fast, efficient.
Okay.
I tell people that cash accounts, which is not margin, isn't eligible for trading because you have to wait every time before the trade to settle. And you can only buy exactly what the amount of money is there. You can't buy a few shares more. You have to use only the money available. So margin is much better. So congratulations, you got your margin account.
Yeah.
I'm getting some feedback over there. Do you have a TV going or something?
Okay.
I can hear
Ruben, you could turn that radio off over there, please. Thank you.
So a couple things that we're doing is we're using our phone app to pull up the stocks. So that way, let's say we're doing Starbucks. We talked about Starbucks. If we use our phone app, we'll have the numbers at the bottom. We'll press the app and then we'll go to Starbucks. It'll say like $87 a share. Oh. And that way it tells you the price of the stock, right? You understand that. And then it shows you the change. The change is if it's up or down for the day. It might be up $1 or down $1 or up 50 cents. You know how to do that?
Yes. Yes, I do.
So I also want you to be able to go and look at the numbers at the bottom. So like one of the numbers at the bottom is a PE. So let's write down PE, which means price earnings ratio, PE. Price earnings ratio. Right, it's right at the bottom. Volume. I'm gonna write volume too. Volume.
Right at the bottom.
We're gonna do there's a PE, Peter Eric, which means price earnings ratio, and then there's a volume. VOLUME, which is how many shares are traded, how many shares traded per day. And then the price earnings ratio is profitability. Okay, PE and volume. Then there's the third one. The third one is 10-year chart. 10-year chart. Now there's 10 criteria total. 10 criteria for stock selection. We're gonna just cover three criteria today. We don't want to do too much. I'll make sure you get everything.
Okay.
We will cover 3 criteria today.
Okay.
And you're new, so do too much to you're in the teachers teaching and the students that are studying in school, and they don't get everything. It's too much. They don't use it. They don't get it, a lot of it. So I want to make sure you get everything so you can apply it in your account. You can start doing your trading. You can start looking at your stocks. And then now, do you know how to pull up the 10-year chart?
Yeah, we did it in the
Like
last
here, if
session.
you look here, this is Chipotle. This is behind me, it's Chipotle. So on top you have like 3 months, 6 months,
Behind.
10 years.
Yeah, I see it behind. Yeah,
Oh.
I see it behind you.
The 10-year chart shows proven track record. So write down proven track record.
Right.
If the chart is going, from the bottom left to the top right, that means it's a successful stock. It's going up over the 10 years. That means investors who have owned the stock have made money because it's going up. If in this case, for Chipotle, it may have been something like maybe 700 10 years ago, let's say, for example, or 500, and now it's 12, 1300. So you see how investors are happy because they bought it at 500 or 700, and now it's 12, 1300, right? Chipotle, write that down, CMG. That's our stock. That's the one behind me. That's one of my favorite stocks, CMG. Don't be afraid to buy expensive stocks because the best costs more money. Gold is heavier than lead, and the best wine costs more than cheap wine, right? Same thing for stocks. We're buying the best. So the 10-year chart, always look at that. Always make sure that the stock either maintains price or goes up. Maintains price, or goes up. Ideally, it goes up. It goes up. Let's say from 500 to 700, like Chipotle CMG, to 1200 to 1300.
Mm-hmm.
So we got 10-year chart. Volume, I like volume to be 1 million to 2 million per day. And the reason that
Volume.
volume is important is because, yeah, the volume is important because 1 to 2 million a day or more, so up to plus, because that means there's a lot of investors who are investing in the stock. And when the stock comes down, they're going to buy that dip and it's going to come back up. So it saves you. So it protects you. It's a stability. It means that there's a lot of cooperation. And we need stocks with heavy volume. We don't trade stocks with very light volume.
Oh, okay.
There are some exceptions, you know. There's some exceptions, but for the basic stock selection, you need to have 1 to 2 million volume or more. I write out all my stocks. I don't have the right notebook here, but I write out once a week. I'll put my 10 stocks. And it'll show volume. 5 million a day, 10 million a day,
Mm-hmm.
and that way there's plenty of volume. So that's the requirement.
Okay.
And the PE. Now the PE mainly just has to have a PE, which means if it has a dash or a negative, that's no
Mm-hmm.
PE. That means they don't make profit. But if it has, let's say, 15 or 20, that means there's profits, there's earnings. A good PE, I like to have a PE of like 28 to 100 plus. So I'm gonna put here 28 to 100 PE. That's the number. That means that the stock is hot. It's hot.
If it's a negative, if it's a
It's in
negative,
favor.
if it's a negative, that means that there's been no trading on that stock.
No, it means there's no profit. No, it means there's no
Oh,
profit. As long
okay.
as there's volume, there's trading. If you see volume there, there's trading. But
Okay, okay.
if you see a PE that has a dash, it just has a dash or nothing there, that
Mm-hmm.
means there's no profit. Now,
Okay.
some stocks you may have like a 70, 80 PE, 100 PE, and then the next quarter it shows a dash. So that one quarter they lost some money, so it's a PE 0, no profits. And the next quarter maybe
Mm-hmm.
they have another dash, and they lost profits. So there's no profits. But the following quarter, it may show a number again. It may show 28 or 100,
Mm-hmm.
and
Mm-hmm.
that means that they're back in business.
Mm-hmm.
It's a green light. Consider the shares because they got their PE back. Makes
Mm-hmm.
sense.
Mm-hmm.
So expect for some companies, not all. Some companies will lose their PE, but they can get it back. I can't say that for volume. For volume, it's either heavy or not. It needs to have heavy volume. We can't really rely on a stock that has 100 million volume unless, let's say, for example, it's a dividend stock, and we have other reasons for choosing our dividend stocks, especially the ones that I'm going to just give you them right now. IEP, Ingrid, Eric, Paul. IEP stock
Mm-hmm.
is one of our best dividend stocks. It's called Icahn, ICAHN Enterprises.
It's one of the what?
IEP is about $50 a share.
Uh-huh.
It's one of our top dividend stocks. It's $50 a share, IEP, and they pay let's say right now it's about 15% dividend. It's $2 paid to you per quarter per share per quarter. So if you have 100 shares, you'll get $200 in January, February, March, $200 3 months later, $200 every quarter, 4 times a year, every 3 months. Now this one, for example, only has about $150,000 shares a day. Okay, and that's an exception to our volume rule. That's one
Right.
exception, for example. So there are exceptions, but there's not many, but there are exceptions.
Okay.
So once again, we need to have a PE, we need to have volume, we need to have a 10-year chart, and those are the most important. Those are the most important criteria right now. We're gonna start with the 3. And I wanted to see if we can look at some stocks that you like, and we can look at to check the criteria.
Okay.
Can we do that? Like, what
Yeah.
stocks do you like?
Well, I like the Chipotle. The
Okay, so
I have,
CMC.
yeah, I have it.
Do they have Chipotle? No, I think you told me they don't have it over there. It's a big US
No, we
stock.
don't have it. No, we don't have it here at all. Hmm. I like the Chipotle.
So Chipotle definitely qualifies. I'll tell you that.
I kind of like that. The n- but I don't know if it's how it's doing because I haven't had a chance. I gotta pay more attention to this, especially when I start buying. Um, I like the Chipotle, the McDonald's, the Starbucks, yeah,
MCD,
MCD.
Starbucks.
Mm-hmm. The
Uh-huh.
Starbucks.
Starbucks is SBUX.
SBUX because I like that because that's steady.
We can start with those three if you want.
Okay.
Did you have another one that you for sure you liked?
Mm,
Do you have another one besides that, or want to go with those for now?
let's go with those for now.
I want you to also put IEP, which is a dividend stock, so you can get dividends.
Okay, just put down IEP al- along
IEP.
along with
Ingrid,
the stock
Eric, Paul.
my stock listing.
Yes.
Okay.
And I want you to develop 10 stocks, which is called the Core 10 Stocks List.
Mm-hmm.
Core 10 Stocks List, which is to say that we're going to study 10 stocks, not more. We're not going to try to investigate, study, or follow 100 stocks. Some people try to do that.
No.
They look at the news. They have new stocks every day. Oh, look at this stock. Look
Yeah.
at that stock, and that can be very confusing for an investor or trader. You want to
Yeah.
focus. We get money by
Exactly.
focusing, not by
Right.
trying to buy all the new flavors of the month. We're going to
Right.
focus on good stocks, and they're going to remain that way. Why? Because they have a good 10-year chart. They prove themselves. They have good volume. That's going to remain consistent. And they have a
Mm-hmm.
PE, which is price earnings ratio, which means they have profit. So you don't need to do more. Like, for
Right.
example,
Right.
if you were a professional trader and you had to trade to make money, you could focus on, let's say, one stock, which is
Mm-hmm.
your best trade. You put your best trade.
Mm-hmm.
You start doing 4 or 5 or 10 or 20 stocks. Then what that's saying is you don't really know what the best one is. The best one
Mm-hmm.
should be your first trade. So we don't need to follow 100 stocks or more. We're just going to focus on 10 stocks. We're going to learn these companies. We're going to get comfortable with them. And that way, when we see them, when we buy shares, we're going to be familiar, and we're going to know how to make money. And we're not going to need to jump around like a rabbit. We're going to stay with
Right.
the
Right. Right.
stocks. Stay with the stocks that we choose.
Mm-hmm.
So I can let me do this. I'm going to turn my phone. I'm going to pull up my stock app. Are you seeing me now?
No, I'm not seeing you.
Okay, well, let me just tell you. Let's say Starbucks. If we look at the 10-year chart, it's going to say the bottom is about, let's say, 20 to today is 86.57. So it went about times four times in 10 years. And then PE is 70, let's say 77, which is great. And volume is 5.6 million per day. Volume is 5.6 million. I want you to write this down for all your stocks. And what else?
Or write down the
Yeah.
PE and the volume every day.
No, once a week.
Once a week. Okay.
You have to understand it. You have to know it. This is learning the stocks. This is learning about stocks. You need to be able to compare. You'll be able to understand what it means. And then when you watch the stocks moving up and down, then you know which ones are best to buy, and you know the ones that you're in are going to make good money. Okay. So let me do McDonald's for you. I think I have McDonald's here also. Well, let me do IEP. Okay, so it's IEP doesn't have a great 10-year chart. It goes from, let's say 40 to 50.
I can't see you.
Well, you can't see me because I'm showing you the charts.
Oh,
So
I can't see anything. I can't see anything.
right, I'm reading the charts to you. Okay.
Oh, okay, okay,
So I have
okay.
to look at them. So the camera's off for a moment. You just
Okay,
write this
oh,
down.
okay, okay.
You just write this down. I'm doing this for you so you don't have to lose your camera. So I'm doing it for you so you don't have to do it. Okay.
Okay, okay, thanks.
IEP goes from 40 to 50. I want you to write that down. It goes over 10 years. So it does maintain price.
Okay.
It lost its PE recently with the COVID, so no PE, but it should come back. And the volume is 67,000, which is low. 67K, which is
Okay.
low, but this is, like I said, the exception. Okay.
Okay.
And here, this one pays, it says 16% yield. Now, no stock can really afford to pay 16% dividend. So, they may slash this dividend, maybe cut it down to 10% or half, which is 8%. But understand that dividend can change. So don't think that the dividend's going to always be the same. You have to tolerate that it might change because of different market conditions. But the important thing is that you get a dividend. And I've been in the stock for 10 years. And I've always gotten the dividend. So I'm here to tell you that they're reliable. And while they may slash the dividend, you'll still get a dividend. Okay. I went over Starbucks. I went over IEP. I'll do CMG. I know I have that here. CMG. Okay, so now on a 10-year chart, we go. Like I said, we go from 400 to let's say 1254, which is what it is today. 1254. Well, I'm sorry, 254. I'm sorry, $1,254. $1,254. Okay, there you go. PE is 139, which is high. It's high, but they're in favor. They're growing. They're like Chipotle's like the organic McDonald's. You understand? The organic McDonald's, and then the volume is 279,000. Now, understand something. When we say volume, that also depends on the share price. So if you have a regular stock that's $120, that has, let me say it a different way. This stock is $1,200, right? And the volume is 279,000, which is thousands, it's not a million. But if you have a stock that's $1,200 that has a volume of 279,000, that's equal to a stock, Michelle, that is only $120. That's $120 and 2.7 million volume. So this definitely qualifies in volume because of the share price. It's like 10 times. So you just put a zero at the end of this volume to compare it to the other stocks that are only 120, the 120 share price that have 2.7 million. So the volume is fine. PE volume and then 10-year chart. Let me do McDonald's. I might have to pull McDonald's up for you. Let me see if I have it here. I have it here. McDonald's has done good. It's gone from, according to this, it's gone from about 100 to 222.
Oh my
Now,
gosh.
you think that's good?
I should have, see, that's why I should have bought from last week.
Well, it went up 3 points on Friday. I'll tell you one thing about stocks is they generally don't move up or down all the time. They generally just go across, which means they make a lateral move. Only during certain short periods of time are they going up or down. So when a stock is going up, for example, that's when you want to be involved with it because you can get a profit, you can trade it, you can sell it. But if you took, let's say the last 10 years, most of the time, stock is not just going up, it's kind of going across. So keep in mind that you can have a stock for, several months or several years. And let's say in one day or 1 week or in 1 month, it makes a big move.
Mm-hmm.
and it moves the majority. It makes the big move in a short period of time, and that's where you make the money. So think of
Mm-hmm.
it like that. You're not going to really know when the stock's going to move. It's not going to move a lot day per day, but over time you'll see it has these big moves. Let's say McDonald's, for example, and in
Mm-hmm.
that time it's having the big moves is when you make all the money. So you have to be patient. So really, the word of the day is patience. Patience. That's one thing I want to just impart on you,
Mm-hmm.
because it's not going to. First of all, it's not going to move exactly how you want it, and it's not going to move when you want it. It's going to move when it's
Mm-hmm.
ready to move. When people are buying,
Mm-hmm.
when they have their quarterly report, when they have profits, when they have um, a value, the position in the marketplace.
Mm-hmm.
Okay, so McDonald's doubled, more than doubled in so much times 1.2 in 10 years, and that's good because the company's so big, you know.
Yeah.
So even that, though it's big, it's still doing good. The volume is 3.2 million. You can confirm everything I'm saying with your stock app, but I want you to do that so you know how to investigate, how to study, right? And I'm going to send
Mm-hmm.
you this video when we're done so you can go over every one of these stocks on your own and they can look at more criteria. Like,
Okay.
for example, there's market cap. Market cap is
Okay.
how big the company is, and you need to have a certain market cap. I'll talk about that next week. Market cap should be about 25 billion or more. You know,
Okay.
McDonald's has 165 billion market cap, so it's great. You know, more. It has much more than the minimum. And then also the PE for McDonald's. PE is 35, and that's a healthy PE for McDonald's. You know, some people say that's too high, but you know, I just tell people that, you know, it makes good money. That's the most important thing,
Mm-hmm.
I think. Like
Exactly. Exactly.
like I'm doing cover calls on Netflix, and I'm paying my cable bill, my mortgage with
Mm.
the cover calls on Netflix,
All
and
right.
my car note, and also my car note. So
What?
yeah.
Okay.
So when
I,
people
oh
say,
yeah,
"Oh, Netflix,"
yeah, Netflix was the one of those that I really wanted to work thing
well,
with too.
let me put Netflix down here too, and LS. So
Uh-huh.
my point is, you know, while it may be highly valued, you know, it pays for itself. You know, you can
Uh-huh.
tell that.
Uh-huh.
Tell it's highly valued to my car note, which is paid off early. You know,
Right, right.
so so what we're doing in these 12 sessions, Michelle, we're learning the stock market, but we're also learning how to retire into the stock market, and that's not a common understanding. It's not a common belief. A lot of people think stock market is a scam. You know, you can't make money unless you're Warren Buffett. You can only make money if you buy a mutual fund. You know, these are kind of these teachings, these beliefs that are out there, but they're not going to help you or me make money. So
For
we're
real,
talking
yeah.
about a specific way to trade.
Mm-hmm.
Um, we're contrarians. Let me write that down. We're
Contrary.
contrarians. We are contrarians, which means we may have contrary beliefs to the herd mentality. We don't have herd mentality. That's what everybody else is doing. Everybody else is buying mutual funds. They're trying to diversify. You know, so we have
Yeah.
contrarian methods, which means that we don't do what everybody else is doing. We do our own
Right.
things, and I'm teaching you specific strategies and philosophies that are going to one, make you money, and two, retire you to the stock market.
Mm-hmm.
So be prepared for someone to tell you, "Oh, you can't do that. You have to buy a mutual fund. You can't pick your own stocks. That's too risky. You can't buy Chipotle. That's too expensive." You know. Meanwhile,
Mm-hmm.
they're buying penny stocks and not making any money.
I'm not making any money exactly.
You know. So
Exactly.
you have to check the source. You know, here, check the source.
Okay, so I'm gonna work on my four stocks. So let me ask you a question. You
Yeah.
can only buy and sell Monday through Friday?
Yes.
Oh,
Yes.
that's what thing, because every time I I said, okay, now I'm gonna sit down. I'm gonna go buy some stock. It's Friday, and then my husband said, you can't buy stocks after closing on Friday. You have to wait until
The
Monday.
market hours, the market
Let me write that down.
hours. Are you familiar with Eastern Standard Time?
Yeah, that's what we're on. We're on Eastern Standard Time.
Okay, so it's 6. I'm sorry. I meant to say Pacific. Pacific Standard Time is 6:30 a.m. to
Mm-hmm.
1 p.m. And I believe that's 9:30 Eastern to 4 p.m. Eastern Time.
So
So
it's what?
so from New York time, 9:30 to 4 p.m. 9:30 a.m. to 4 p.m. For my time, it's 6:30 a.m. to 1 p.m.
Okay.
Market open. Just think of 9 to 4, 9:30 to 4 Eastern time.
Yeah.
So you're on Eastern time.
Yeah.
Okay. Now you can place an order. You can put order. You can put right now with the $2,000. Let's say you want to buy Skechers, or let's say you want to buy a few shares of I don't know McDonald's
Mm-hmm.
or Starbucks, or you can buy, let's say, 2 shares of Chipotle. You can
Mm-hmm.
put the order now, buy stock, buy how many shares, and
Mm-hmm.
you can put like a market order or a limit order, but it won't take until Monday
Monday.
in the morning.
Okay.
Okay, so you'll have to wait.
Okay.
But when it's Monday or Tuesday, when you place the order, it goes right away. Understand?
Okay. Okay. Okay.
Let me
Okay.
do Netflix. Let me do Netflix while I'm here. Netflix is my favorite stock, by the way.
Ah. Okay.
Okay, so it's 503. Okay, so it went from, let's say, 60. I don't know what that is. 60 to, actually, it says 33. 33. 33 to, let's say, 500. So that went up. So, like, for example, 33 divided by 500 divided by 33. That's what I meant to do. It went up 15 times. Okay, times 15. Went up 15
Mm.
times, which is 1,500% in 10 years.
Mm.
10 years. So it's really growing. I think the price will maintain. I think we're going to go a little higher, but it's going to stabilize a little bit, and we're going to still get great money for cover calls. So that's a good stock. And the volume is 6 million, which is great. And the PE
Mm-hmm.
is 84 PE, which is great. And the 10-year chart went from $33 to $500, so only 15 times. So that's like an example of what a good stock can do. You can go up to,
Mm-hmm.
you can multiply your money times 15, you know. So that's great. And if you're depositing money,
Mm-hmm.
if you're making deposits, which I want to talk about, then you're getting exponential returns because you're depositing more money, let's say every month. Did we talk
Mm-hmm.
about you depositing money every month?
Yeah. So just deposit it up just like how I did the money I put in already.
Well, okay, so let's talk about that. Great,
Uh-huh.
congratulations, you made a deposit and you got your account started. That's great. You can buy stocks now. You're starting to learn these principles. You're starting to have criteria. Oh, you know what it is? We have standards. We have standards. We don't buy crap.
Mm-hmm.
Never. So that's what we're doing. We have standards, we have selection, we have criteria, right? So
Mm-hmm.
um, now back on the money. You have to start your account with some money. That's great. You did that. You got the margin account, great. But you have to keep depositing. There's a lot of reasons for that, but mainly is that you're always going to need to fund your business. If you have a
Mm-hmm.
business, no matter what business, you got to put your
Mm-hmm.
heart into it.
Yeah.
For stocks, it takes money. it
Mm-hmm.
takes a little bit of study, but really it takes sacrifice, money, discipline. Which means
Mm-hmm.
if you can put $200 a month, $100 a month, $500 a month, whatever you can put needs to be consistent deposits, because what will happen is you'll have a situation where you can go through a few months where the market comes down, and your value is going down because of market conditions, not because of your fault. You know? And you need to be able to have that money going into your account like it's like blood flow. It's a positive, and you're supporting your business, you're supporting your account with consistent deposits. And that way, it'll keep your account from going down too much. And then when the market's going up, you're putting more money, you're buying stocks, now you have an exponential return because you're going to have the return of the market plus the extra money you put in. So you won't find a successful business that doesn't receive cash flow. You know, so the stock market is safe. Now, once you get to a bigger size account, you know, a few $100,000, $500,000, $1 million, you don't have to, you know, keep putting money in there. But what happens is people just keep putting money in there. You know, they're going to do the tax returns, they're going to sell a property, they're going to inherit money, they're going to trip over money. I've never met a successful entrepreneur trader who doesn't put money into their business. So
how often should I put money in?
At least once a month.
Okay.
Yeah, a lot of retired people put some of their Social Security in their account. And they're making a lot more money in their stocks than they make from Social Security, for example. Like, for example, if you're making 16% a year for IEP dividend, which I told you is high, maybe it gets cut down to half, 8%. If you have $100,000, you know, that's giving you $16,000 a year. You know, if you have $1 million in that stock, that's giving you $160,000 a year. So it's more than Social Security, for example. Once you get a bigger account, you know. And if you're doing covered calls, here, write this down. Covered calls. First of all, dividends, income. Let's just say 5 to 10%. We'll make it easy. I have a philosophy where I say under promise and over deliver, which means we're gonna impress the result. We're not gonna lie or exaggerate. What happens in life, you know, a lot of people like a salesman, they over promise and under deliver. So you're gonna go buy a car. Oh, this car is gonna be the best gas mileage, man. You're gonna feel like you're floating on a feather. You know, it's gonna be the nicest car. You know, you buy it, it breaks down. You know, and you get upset. You know.
Yeah.
What he should have said, he overpromised, underdelivered. What he should have said, hey, you know, it's not much. It'll probably get you home, but you know, you only give me what do you want for $1,000? You know, it has a good air conditioner, but you know, so for the stock market, for things to do in life, you don't want to overpromise. You want to underpromise. So when I can get, I say 16% dividend right here. It says on the stock 16%, but I'm just gonna say 5 to 10% because it may not always pay that. And other stocks, like let's say Philip Morris, pays 5%, and my other stock I have is EMD. Put that down. EMD. Eric, Michael, David pays 10%. Okay, pays 10%. So I'm gonna put 5% to 10% dividend for dividends. I don't want to overpromise, you know. So I know we can get that even easily. We can get 5 to 10%.
Right.
So for on a $1 million account is $50,000 to $100,000 per year, which is more than Social Security.
Yes.
So just think of yourself having $1 million. That might be a good goal for you in the long-term goal. You're getting $50,000, $100,000 a year just by holding the shares. That's dividend. So that's the goal. That's the 1 million goal. And then other income I'm gonna put here is covered calls. It's covered, like you cover the bed with a blanket, covered calls, which is called on the phone, cover the bed with the blanket, call on the phone. And I just put CC, capital C, lowercase c, covered calls. So this one gives you 3 to 4% per month. and you're gonna take times 10. Remember, we under promise and over deliver. So we're not gonna do it 12 times. We're gonna do 10 cover calls a year. And you get 30 to 40% return per year. And we're gonna lower that because we might have some loss in the stock. So I'm just gonna say 30% return. I'm gonna show you exactly how to make 30% return, Michelle, a year on cover calls. I've been doing it for more than 10 years.
Okay, okay.
So if we have $1 million, again, we're getting $300,000 a year on cover calls. We're getting $50,000 to $100,000 a year on dividends. Let's say 75,000. Let's average those out. 75 plus 300, 375 divided by 2. So I'm going to show you how to make 187. Let's say 188,000 per year on $1 million. Now your account's going to initially start out $1,000, $10,000, $100,000. We'll get to $1 million. Just stay with me, okay? Okay. Keep in touch, okay?
Yes, yes.
Okay. So we start doing these small trades because we deserve to have a small account. We earned a small account. But once you start getting a bigger account, we deserve to have a bigger money, more money, bigger trades, bigger positions, more shares. Then we're getting the bigger money. But what I would tell you, the trades you're going to make it at $1,000, at $10,000 are the same trades you're going to make it $1 million. You're just having more money, more return. So we have to practice now, learn now. We have to earn our position in the market when we're small. We have a small account. When we're young, when we're novice. That way, when we're experts and adepts, we'll have a bigger account, making more money. We're going to have much more confidence. It's going to be basically repeat what we do. So the things we're doing now in your journal, these trades you're writing down, these stocks you're writing down, it's the same thing multiplied by 100, by 1,000 later on. And if you lose money, if you make a bad mistake or lose money or pick a bad stock, it's better to do it now while you have no money, very little money, than to do it later when you have a lot of money. In 5 years, 10 years, when your account is big, you don't want to make the mistakes then. You want to make the mistakes now.
Yeah.
Okay. Questions on that? Any questions, any thoughts? I want to hear you talk. Come on, tell me.
I had a question earlier. Let me look at my notes.
Always review your notes. In this journal, you have 2 sessions. So make this a 3rd session. You're going to have 12 sessions of strategies, of trades, of stocks, of numbers. And you're going to take this. I want you to rewrite it really neat. So I'll just show you so far what I got.
Okay. Yeah, I got a bunch too.
Good.
I'm gonna
So you study
write
it.
it up. Yeah. What I'm gonna do tonight, I'm gonna write over all my notes.
Yes.
That I haven't written over yet.
And you have to send your homework. Homework is to send me a picture, a snapshot.
I know, and I still didn't, and I keep forgetting to send the last time.
That just keeps you focused. It keeps you working. It keeps you centered on your learnings, and it helps your trading. And it's like anything else. You have to put time into it, and if you're busy, just set aside like an hour a day, or maybe 3 or 4 hours a week on a weekend. You don't have to work every day.
I have the time to do that. It's just that this past 2 weeks has been rough because, first of all, I work for the legislature, and we were building a building for the legislature, and we finally moved into it. So last week was just too much work, too much stuff going on, getting in the new building and everything. So I didn't have time to do anything for myself.
Understood. Understood.
But I'm going to set aside an hour, at least an hour a day, to look at my stocks, to look at all my information, and to get going with it. Because I'm kicking myself. I wish that I would have taken the time last week to do something. But I'll start tomorrow.
That's good. Now, just text me if you have a question. That we don't have to wait for the next week.
For the class, okay.
But sometimes, you know, the class is the most important thing because then we're connecting. And if you have a question that's catered to you, I'm not just answering like a textbook answer. You know, it's catered to you. So that way, I don't want you going online and learning stuff they're teaching you. I don't want you learning from the TV. You have to learn these sessions the way I'm teaching from me. That way, there's no miscommunication.
Right.
Remember, we're contrarian, so they're not going to teach you on TV these principles.
Yes,
so
exactly.
I don't want you to, as long as we're studying, I don't want you to read books. I want you to focus on these sessions, learn this stuff. When you watch the TV, understand TV is entertainment. It's propaganda. They're not teaching you how to retire the stock market. They are not. They're not teaching you online.
Because in these few sessions that I've done with you, I can already see how you're more focused on helping me to really understand the stock market and to make the right choices, you know.
Yes, exactly. Exactly. And maybe the best thing to do for you is to buy a few shares, you know, and then you can watch the market go up and down. You can watch your stock. You can buy a share of Chipotle. You can buy some shares of McDonald's here. McDonald's, Starbucks, IEP, Netflix, and you can see your account move. And then we can go to the next step. You know, the next step might be to get a dividend. It might be to do trading. We have to do 100 shares to do a cover call. I'm gonna write down 2 things. Twitter, it's great for cover calls. You get about 5% a month. On the cover calls, I didn't explain it enough. I wanted to say that as an apartment owner, owns the apartment and rents out the rooms to get a monthly income. A stock market trader owns the shares and rents out the shares to get a monthly income. So an apartment owner might have 10 units, 10 apartment, and they might get $1,000 a month for each room, where the stock market trader can get 1,000 shares. And every 100 shares, which is a contract, 100 shares signifies contract, one contract. They write a cover call, right? CC, to get income for every 100 shares. Gets income per
so 100 shares signifies a cover call?
You need 100 shares minimum to do a cover call. So I'm going to put down Twitter, which is, I think, $46. And then Skechers, SKX. You know Skechers, the shoe company?
Yeah, I love those shoes.
That one is good because it's low. It's about $30. So it would be 3,000 to do 100 shares, right? For Twitter, it would be 4,600. So this might be better for you to start to do your first cover call. Not today, but maybe in the near future. So if Skechers is 30, it'd be $3,000, and Twitter is 46, it'd be 4,600. And just consider that you'll be making about 5% return. You know, a month. We're gonna do it 10 times, and we're gonna have some share growth loss. So it might end up being, let's say 50%, let's say minus 20% equals 30% return a year, which is, like I said, 30% return a year on cover calls. 50% minus 20% plus 30%. And you can probably do a lot better. You could do worse, but you're going to learn. You're going to have the experience. You're going to do these trades, buy these shares. And next time we talk about stocks, you'll be like, yeah, I have stocks. I have dividends.
Right.
And you get familiar with this stuff. I'm going to write this over.
That's a lot.
I'm going to send you a copy of my notes so you know what the homework's supposed to look like.
Okay.
So now we just talked about 7 stocks: Chipotle, McDonald's, Starbucks, IEP, which is Icon, Netflix, and now it's Twitter, number 6,
and
Skechers, number 7. And I want you to have a list of 10. I want you to get 10 stocks. That way you're going to focus on those 10. You're going to get comfortable. You're going to understand. They have volume. They have reasons. You have standards. You're not going to pick. I'm not going to let you do a penny stock. I'm not going to let you buy a stock that looks terrible on the 10-year chart, on the volume, on the PE. If it's too low market cap, some of these penny stocks, have the market cap, I say, of a house in Beverly Hills, which is maybe 10 million. You don't ever want to buy a stock that has only 10 million market cap. It's like a brand new company, like somebody's bright idea. We don't buy bright ideas. We don't buy bright ideas. We buy proven track records. We buy bigger companies that have employees that maybe they serve in 100 countries. They have, a valuable product or service. Not some bright idea. If you have, let me give you an example. If you have a corner, and on one corner is a guy who has, hey, so Brad, I have a bright idea. I have a little sign. I'm gonna make, the next cure for cancer, whatever. And on the other side, let's say they have a company that has a building, they have workers, they have it's functioning, and he's selling shares. It could be McDonald's or Chipotle, something that's proven track record. Starbucks, Starbucks, the drive-through line is all the way down the street. People are lining up in Starbucks. So that's a proven system. They know how to do it. And there's other guys over there with the signs. They have we have a great idea.
Right. Well, it's not proven. It's not proven.
Who are you gonna put your money to? You have to put your money to the proven track records. I don't want you to buy bright ideas. I want you to buy new companies. I want you to buy startups. I want you to buy a 10-year or more experienced company that has a proven track record, that has a service or a product. They have profits, you see? So now we're already eliminating a lot of pin stock. We're eliminating companies that are new, IPOs. There's a time when you can make good money on IPOs, but it was always high risk. I don't want you to have high risk. I want you to have low risk. But we are contrarian, so don't listen to the TV. It's really only entertainment. Here, I'll put here. TV is propaganda.
Right.
They just tell you what they want to tell you. Oh, this stock is hot. Oh, this stock is good. Oh, look at this.
I know, because I know this company keeps coming into my email all the time, the Motley Crew or something, not Motley Fun or something like that, and I'm looking at them. The Motley Fool, yes, and I'm listening to them, and I'm reading the stuff, and I'm saying, I prefer to stick with Eric.
I'm glad. Thank you, by the way.
Yeah,
I appreciate that. I want to say that the Motley Fool is a good example of they're trying to sell you something. They're trying to sell you their ideas. You pay me, and we're gonna give you the best stocks. And here's the thing. You don't need the Motley Fool to pick good stocks. I'm going to teach you on your own how to pick good stocks. You're not going to ever need the Motley Fool again, because all this stuff we're doing, criteria, stock selection, they do it on their own way, and then they try to sell you a newsletter, telling you, I'm going to give you the hot stock. I'm going to give you. But you're going to be able to do it yourself when you're done here. You're not going to need the Motley Fool. You're going to learn how to do everything that they're trying to sell you. And you notice they're not going to ever tell you, hey, what's the 10-year chart on this one? Hey, look at the PE. Do they have good volume? They're not going to say that stuff. They're going to say different stuff. No. The TV also doesn't really teach you how to do what I do, so I don't want you to think that everybody's the same. Everybody's kind of different, so you're not going to get the same learning from here as you do from TV or from YouTube or from a book,
Yeah.
So we covered a lot today. We covered the 3 criteria, PE, volume, and 10-year chart. We covered 7 stocks. We talked about dividends getting 5 to 10% a year, and covered calls getting 3 to 4% a month, which equals about 30% a year. Okay. And that's better than Social Security, and that can pay your bills. And the goal is to retire in the stock market. That's the goal. Retire in the stock market.
Right.
Small accounts, you'll get a small return. Big accounts, you'll get a big return.
I promise you that next Sunday, you're going to be surprised. I'm going to have stocks. I'm going to have everything going. And you're going to say, what, Michelle, you did it.
Yeah. Good. I'm going to hold you to that. And also next Sunday we'll start on time. My apologies. I was late. That's my mistake.
Yeah, that's okay. That worked out fine though. That worked out fine for me.
I had to upgrade my
Definitely.
Zoom so to get the recording. So we're recording. And
Okay.
actually forgot my password. So I was fumbling
Ah,
for 5 minutes. Then I
right,
realized
right.
the password. So we can do recordings every week, and I can send you the recording so you can look over.
Oh,
You can
that's
look over what I
wonderful. That's
said, what you
wonderful because
said.
that's a good way for me to refresh and to anything that
Yes,
I didn't get to write down, I can go over, I can get it.
good. Do you have any other general questions? We're about to wrap up soon. So, any
No,
other thoughts you want to talk about? Any other questions?
no, I'm good. I'm good. I'm just gonna go over my notes and everything, and I'm gonna go and oh, you said that I could
Buy a few
put
shares.
it buy the shares now, and it'll go take effect tomorrow, right? So I think that's what I'm
Yeah, you
gonna
can put them.
do.
You can put a market order. Just put a market order. There's limit market.
How you
Just
do?
put a
How you
market
do?
order and buy a few shares. You'll see that the choice. You can limit market. Just put a market order, buy a few shares. You can do McDonald's or Starbucks.
Okay,
You can
okay.
spend maybe spend $1,000 or $2,000,
Mm-hmm.
whatever you want. But you're gonna get the experience and start trading and start um, buying these companies. You're gonna have that knowledge,
Right.
and you're gonna learn.
Yeah, I have
You
to,
learn by doing,
and I have
not
to.
by talking.
Okay, right, right.
Right.
I have to upload some money from my other account into the account that I have
Good.
attached to the my Ameritrade account because so that I can put more money in there. So I'll do that tomorrow because
I
I
have a
won't be
question
able
for
to
you.
do it.
Can you, let's say within these 12 weeks we're gonna do, can you get to
Mm-hmm.
maybe a 4 or 5,000? Is that possible for you or no?
Yeah, 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 yeah.
I'm gonna tell you why. Because if you can do that, we'll have enough money to do a cover call and plus buy some more shares. That's why.
Okay, well,
That's just like a
what
general
I
goal
can
for
do,
you.
I'll try to see if I can put that in
Okay.
tomorrow or
Yeah.
Tuesday,
Yeah.
and then we could do that.
And if you have any questions about your account, you can always call the broker and they can get them online and they'll explain to you.
Okay,
And
okay,
if you don't get a good answer, just call me and I can help you too.
okay.
But I want you to learn how to use your broker because that's what they're there for, to walk you through the trades, to explain to you what you need to learn about your account. I can
Mm,
teach you how to do everything, but if you have a question about your particular account, the money to transfer over or what's available by Empower, I can help you. But also be willing to use your broker because that's their job.
mm. That's your job, right? Exactly.
Okay,
Okay, okay
good,
then.
good
Okay,
session.
thank you.
Do some homework. Send me a picture or two of your writing,
Yes. Okay,
and
okay.
we'll do next Sunday,
Next Sunday,
um, 2 o'clock.
2 o'clock. Okay
Thank
then.
you, Mr.
Take
Chung.
care. Have a good week.
Okay.
Okay.